What's going on, everybody? Michael Silva here. You're watching the Stock Market Brief Show. What a wild day in the markets today. Big down day, especially in growth stocks. We're going to be covering that all today. I saw some very big bearish positions taking place today that are short term. I'm going to share those with you of what exactly they were, and I'm going to also go into the earnings plays tomorrow and what the options market is pricing in as far as expected moves on some of these big banks. We got a lot to talk about on today's episode. Defensive posturing looks like it's coming back. We've been preparing for this. Hopefully you stayed safe in today's market environment. Let's get into this very important episode. All right, everybody, welcome back to the computer. I'd like to be funny here, but unfortunately, if people were long stocks and they got obliterated and they weren't paying attention to risk, it's not the greatest time to listen to somebody crack jokes. So I'm going to try to be happy and understanding at the same time within this episode. So first and foremost, let's just take a look at the 11 sectors that make up the S&P 500. And what you'll notice here is we have defensive kind of creeping up the list again. Okay, utilities, consumer staples, real estate. Okay, there's some defensive names over here. And we've been talking about this defensive posturing that's been taking place. And now we're starting to see it kind of come to fruition, especially on a day like today. Now, if you take a look over here at the indices, Dow Jones held up pretty nicely, only down 0.5%. It's the Nasdaq and the Nasdaq 100. Nasdaq 100 is down here, down 2.5% or 2.6%, and then the Nasdaq Composite was down 2.5%. Those are some huge moves. If we take a look at the heat map, okay, scroll to the next slide, what you'll notice here, it's pretty darn red, and those big squares mean that they're bigger market cap. They have more weight, and we've been saying to pay attention to those big names. Which names? They include Microsoft, and Google. Those were the big ones that we wanted to pay close attention to. As far as consumer discretionary goes, Tesla, very just red on the day, and Amazon there to Apple. All of them got really hammered. NVIDIA, another big name to pay close attention to. Okay, so a lot of sell side activity hit the tape today, tore apart the markets. If we take a look over here at the advancing and declining issues, it's actually pretty 50-50 overall. So it's not a big discretion here, but the big difference is when you look at capital. Okay, look at the flow. You're talking on the declining stocks, you're looking at 7 times the amount of capital flowing out than the advancing stocks. That's a big discretion, and really the reason why is because, well, it was the mega cap stocks that were hit. Now, if you take a look at the relative rotation graph, we've been showing this. It's on the weekly time frame, looking at a 4-week tail length. It's been these sectors that have been going from improving to leading while others are rotating out. So you have real estate, okay, consumer staples, utilities, materials is getting into that leading quadrant. Healthcare, financials is trying to make a turn there too. All right, but technically it's in the lagging quadrant still. So yes, we have defensive posturing, defensive rotation taking place, and we're starting to see that more and more frequently. We'll look at those charts here on an absolute basis. Let's take a look at XLP. XLP remains unscathed from all this market volatility, right? It's been going up, nice little pullback on low volume, comes right up, pulls back on declining volume. This is going to be one to watch. So if you're looking for individual stocks to potentially play, you're going to want to look into consumer staple stocks and utility stocks. These low beta stocks and low beta names seems to be where the market is positioning ourselves until this volatility can kind of just subside a little bit and the market can get back on its feet. As the Fed decides what it's going to do. Is the Fed really letting air out of the bubble? If they are, then you do not want to be long growth stocks, because they're hurt with these high interest rates. They're hurt with a background where the Fed are lifting rates into an environment where potentially growth is slowing. If you take a look at the relative strength line of consumer staples to the SPY, we're seeing a big pop here. We've been talking about that coming into 2022 and even before, how there's a positive divergence there and a positive divergence in the rate of change, saying, 2022, the early start might be the year to start off with consumer staples. Now, this gets very interesting because you can also look back here to the financial crisis where we had a positive divergence on the rate of change and you started to see it move up. During times of panic, right, even consumer staple stocks, even though this line went up, consumer staple stocks still, there was plenty that went down significantly. So just know it's just a safer place to be in times where the S&P 500 is obviously going down and this line is going up. Okay, it means it's performing stronger on a relative standpoint. Now, utilities, another one where if you're in the Discord, I've been posting more utility plays here today and a couple, I think an industrial play, and then I'll be getting into some consumer staples when I see them set up. But utilities here also looks like it's potentially flagging. So we're going to look to see it try to recapture that 20-period moving average, which is just above 70. But as it stands, I mean, you can see here it's a lot, less volatile than the overall growth stocks, the Nasdaq 100 and the S&P 500 as of right now. Today, it was up on the day. All right, and if you look at Michael Guyad's beta rotation strategy, the week isn't over yet, but it is below zero, which signals that utilities is technically weak. But remember, the week's not over. It can if utilities have a good day tomorrow, it'd be right back above zero line. So it's going to be something to pay attention to. Now, let's get into the earnings that are taking place tomorrow. We have banks that are earnings. JPM is one of them. JPM has been on a monster tear. So this is what I want you to pay attention to. A big, huge move to the upside, coming into an area of resistance, and then we got to decide, okay, so where could this potentially go? Well, if it jumps to the upside when earnings are reported, it can go, the options market is pricing in a move just above 172 on the high end and then 164 on the low end. So that is kind of the range where we're looking. Okay, and you can see it's kind of wedging here. So it's anybody's guess as of right now. Financials have been outperforming the S&P 500. We've already seen a monster run up. So when we get into some more of these charts, it seems as if the likelihood of the move would be going to the downside, but it's still a very obviously hard environment to really navigate when you don't have, proper, setups. It's just really just been a very big chop fest. Now let's take a look at Citigroup. So Citigroup, 70 to the high end, they're reporting earnings, and 66 to the low end. But look at this move. It came from 58 pretty much straight up to start the year here, into the new year, to around $68 to $69. So can we get a pop up to here? And if we do get a pop up to here, you need to be prepared if you're long to potentially take a little bit of profits off the table there. If it goes to the downside, come down to around 66. That's what the options market is pricing in going into tomorrow. BlackRock, this is another big one. This one saw a pretty nasty down day, down 2% on the day as it closed below the 200-day moving average. You know what's weird? Actually, a lot of these earnings plays, at least last year, the stocks that actually went down hard into earnings ended up gapping up and ripping. I don't know what it was, but that was what was just taking place. I saw it countless times. I think PLBY was one of the names that just totally head down into earnings, but then it just gapped up and ran like 30%. So it's anybody's guess, but the range that it's pricing in is to above 900 to just around 830 on the low end. That would be a huge hit. Now, the reason why this is important to pay attention to is because financials have been holding the market together. They've been holding the S&P 500 together. Right, so as big tech stocks have been all wavering and falling, the S&P 500 hasn't been performing nearly as bad as the Nasdaq 100, and that is really because of financials and some energy stocks. So if financials start to just get obliterated, and tech stocks, they don't catch a bid, that means that there's going to be some pretty severe downside still left in the S&P 500. All right, if we take a look at WFC, Wells Fargo is going to be an important one to watch. Already made a huge, huge run. And when you make huge runs, these runs have to get eventually digested. So we're at the upper range would be to a 58.23. That's what's expected to hit either the upper range tomorrow or to the lower range, which is around 54. It doesn't mean that it's going to tag one of these. That's just what the options market is pricing in as far as a risk range. So the range here of risk is here just for tomorrow. So obviously, if there's going to be a lot of volatility, it's going to be an important day. So on the lower end, it'd be 54. So, I mean, by all means, this looks like it can pull easily back to 54. Okay, so we'll keep an eye on that one too as well. But I want to look at the financial sector. Okay, so let's just bring up XLF. You can bring up KRE, you can bring up BKX. I'm just going to look at XLF. And you can see here that it's been in an up channel, short-term up channel. You hit the higher end, you come down to the lower end, you come to the high end, you come down to the low end. And as it stands right now, the options market is pricing in a move that's slightly higher to around the upper edge of this channel, and then potentially down to 40.5 on the low ends going into tomorrow, which is right into that previous area of resistance. Now, this was an outside trading candle, all right, and you can see is a strong move. So is the outside trading candle going to get some follow through momentum, and we're going to tag down here lower? To me, this seems as if it's going to head lower, like it's going to have to go through a period of digestion, and or flag or consolidation or something. Heading into earnings and looking at these charts, it's like price ran up prior to earnings, and even if the earnings are good, then it's going to be like a sell on the news event. That's what I'm thinking is going to take place. I'm not placing any big bets at all right now. But that is kind of what I'm seeing here take place. I can be absolutely wrong. That's totally fine. But just these large moves, you got to always ask, where did price come from and where can it go? Well, price ran straight up and it hasn't even digested yet. It's going to digest at some point. It always does. And whether that's to the side or pulls back a little bit, that's yet to be determined. Now, this is where it gets interesting. I talked about, big bets being taken place. Well, today, this hit the tape. Right? So if you look at, this is like a $1.4 million trade. And I tried to look to see if it was like a spread or something. All I saw was this trade by itself. So on March 18, 22, the 38 put, 32,000 contracts at 46 cents. They're already in the money. You can see here, it's at 0.5 to 0.62. That's the current spread. So it's a pretty big spread there. They got it at apparently 0.46. That's a big trade. And if we're looking at the XLF chart, let me go back to the XLF chart. It's not that far off. And, you get till March to get there. Let me see here. So we're looking at, March 20 to 38 put. So 38 is actually down here. It's actually a lot lower. That they're basically saying that by March it can come to the lower end of this channel. Maybe they're not going to hold it till expiration. Maybe we do get that strong move to the downside and they just sell, then they just get rid of the position or they remove some of it. I don't really know, but needless to say, it's a bearish position taking place. And you can see here today, there was not that much options volume relative to the last 5 days. This is pretty normal to see around these 416,000 contracts, at least according to the last 5 days. But you can see a significant amount more puts being bought than calls. So some bearish positioning taking place going into these earnings. Now, a couple other things that we need to pay attention to as we're going into these earnings is obviously the 10-year yield. The 10-year yield backed off a little bit. So if the 10-year yield wants to continue to back off, well, we need to pay attention to that because that's not good for financials, right? If 10 years going down, if 30 years going down, well, what does that mean? Well, I mean, that puts pressure on financials. Why is that? Well, it's because banks, they like when yields go up because they borrow short-term, they lend long-term, okay? Let's go to the TLT. The TLT caught a little bit of a bid today, up almost a percentage point. I wasn't stopped out of my position. I'm at a break-even stop still. I almost got stopped out, but it did turn up today. So if the 10-year yield wants to come back down a little bit, you might think, well, would tech be the place where people rotate into? Potentially, but if there's more fear that comes into tech and growth stocks and there's more of an unwind, and on top of that, there starts to be more selling in financials and or energy, where are people going to start going for safety? And the safety trade could very well be the TLT. It could be UUP, right? Dollars. And we talked about it potentially reaching down into this range. This is the UUP that I'm looking at. This is just an easily tradable fund. And the dollar chart didn't update the one that I typically use, but it's the same thing. So it pulled down into this previous area of resistance, and then we caught somewhat of a bid there. So perhaps this is also a potential flight to safety where we start to see the dollar kind of jam itself back up amongst all this uncertainty. Now, another thing that I want to point out is energy. Energy has been on a huge monster tear. Today it was an outside trading candle. We've been overextended. We've been talking about how it probably is going to be consolidating or pulling back at some point. Well, today, if you look at the options market, right, a little bit more than normal volume traded. as far as total contracts go, but not by much relative to the last 5 trading days. So a little bit more, but not much. But you can see a lot more puts being purchased than calls today. And on top of that, there was a pretty large trade taking place. This is around $1.6 million put trade, and it's like expiring very soon. Okay, so Jan 28th, 22, the $62 put. So you can see that right here. And we also saw some come in at the 61.50 too. So you can see 25,000 and 20,000 of those was basically just swept right up at 0.84. And they are clearly in the money now, as now the spread is 108 to 1.21 at this particular point in time. So let's take a look at that trade really quick on the chart. So it's 62. So let me go over back to, there we go, XLE. So basically they're saying very shortly we can see a move down, just right into this range. And, if we get a strong move down tomorrow, they'll probably get rid of it, I would imagine, and take those profits. But that to me is a very possible thing to see take place very quickly. So, that's something to potentially watch out for going into tomorrow, is energy backing off, and potentially also, financials backing off too a little bit. All right, let's look at the indices. Obviously, there was a lot of sell side today. We've been talking about this since this bounce right here. We said, okay, now I could potentially watch for the bounce, right? But then make sure that it's on good volume, but it wasn't. It was on declining volume. Then we got this crack with higher volume. So there it was. That's what I did not want to see, and we closed below the 20, the 50-day moving average. Clearly, volatility is still here. It hasn't backed off, which makes it a very difficult environment to trade. If you trade a breakout, you need to take your profits sooner and smaller profits, and if you get to break down, you need to get out of the position quicker and much more aggressively too as well. That's how you have to trade this environment, unfortunately. And when it's in these trade ranges, you can try to play the longer ranges as it stands, but just you need to always focus on risk first and low risk entries. As it stands right now, what we've been pointing out is it seems like we need to rotate into the defensive names until this calms down. Now let's continue on to the 15-minute chart. The 15-minute chart intraday put in a little bit of a divergence. You can see here we had that pennant pattern. It gapped up, go figure, on the futures market, but it didn't get back above this high. It got pretty much flat, and then we sold off. Right, it was pretty aggressive. We came down to the 5-day moving average. We back tested it. I actually posted that chart in the Discord intraday. It back tested. We got a bounce to where the 50% retracement level, and then we started to crack down pretty much straight through that. So it was a little bit of a dead cat bounce. Okay, now where is the options market pricing in the remainder of the week? Well, not the remainder, but this is what last week options market said that it's going to be priced within. And we've already tagged the lower range. We basically tagged the top range, and now we're right back there in the center. So if we want to come right back down, it's very possible. We can still do that, and that would still not be crazy, right? That's what the options market price in. 70% of the time it's going to land within here. All right, it could also come right back up here. But given the current context of everything, it's kind of hard to believe, unless if tech just has like this monster rally to tomorrow to help the SPY come up, especially if financials back off. Now, if tech has a rally and financials have a rally and everything has a rally, then yeah, I guess we could head up significantly higher going into tomorrow. Okay, but if we do, by the way, go to the very top range tomorrow, that means that it's even just more wacky and more volatile of environment to, just to be even more careful. Let's look at the Qs. So tech, down 2.5%, huge candle. We got below that previous shooting star or high wave doji, whatever you want to call it, and we got that confirmation, and it just shattered down to the downside, getting right below, cutting through butter, that 100-day moving average, and getting really just right back to the bottom of this trading range. Okay, so let's look at the 15-minute time frame, and then I want to show you what the options market. Actually, I'll show you the options market chart first. This is what they price in for this week. So it's basically saying now, Friday, if it closes within there, it's right? So 70% of the time it ends up being in this range, and we're still in there. Okay, so if we get some more sell side taking place, well, it can come down to here, 370, 372.50, and then we'll take it day by day to see what takes place. And I'll do that in the weekly recap. As it stands right now, super volatile. All right, so don't go running into this, guns a-blazing, especially during earnings. You need to be very tactical. You need to monitor your risk. And like I said, I can't say it enough. Like, you need to be careful. And if you're not careful, you're going to get whacked around. Okay, let's take a look at the Qs on the 15-minute time frame. We had that little pennant yesterday, same thing, gapped up, and then it sold off intraday. You can see here it actually cracked through the 5-day moving average and then just used it as a resistance, or the 38.2, and then started heading lower. And as it stands right now, we are getting a little overextended to the downside on the 15-minute charts for both the SPY and the Qs. So perhaps we do get a little bounce. Perhaps, I mean, it could just be like, just pay attention for chop. As it stands right now, there's just not a good setup. And going into Friday, if you want to have a good weekend, I wouldn't do anything all too aggressive as it stands right now, right? We need, once again, to see volatility kind of die off as everybody seems to be rotating into defensive sectors, XLP, XLU, so XLP, right? XLP, XLU, okay? UUP is another one, right? Defensive, TLT possibly. Even gold has been doing good, so GLD, or, you know, gold itself, you know, it's all like more, you know, risk averse type trades taking place right now. And that seems to be the safety trade up until, like, you know, until we get some more decisiveness on, is growth going into this bear market? Are we going to start to see tech start to falter? And we got to stay here within these low beta areas? Or is it going to turn around? Well, we'll know that when volatility subsides. But as it stands right now, be careful out there. That's all I got for you on today's episode. Everybody have a wonderful night.